All right, let's get right into it. The world of financial technology is going through a massive, and I mean massive, vibe shift. You know, the old days of hype and just burning through cash, they're over. A new era of maturity, profitability, and, well, realness has finally begun. So today, we're going to break down what this new chapter looks like by looking at three huge moves that just happened. And this quote right here from our source material, it perfectly sets the stage. We've got a global IPO from an emerging market giant, a super strategic acquisition in the crypto world, and a major Wall Street endorsement. Each one of these tells a crucial piece of the story about where fintech is headed. So here's how we're going to tackle this. First, we'll talk about the big picture shift. Then we'll dive into our three case studies. That's PicPay, Ripple, and Wealthfront. And finally, we'll pull it all together to figure out what the new playbook for success actually looks like. Okay, let's set the scene. For years, the mantra in fintech was blitz scaling. It was basically a land grab for users, fueled by all this cheap venture capital. The idea was to grow as fast as you possibly could at any cost, and then worry about profits, later. Maybe. But with interest rates way up and investors demanding returns, that game is officially over. The focus has completely flipped to the bottom line. This slide just captures that change perfectly, doesn't it? We're moving from a world of hype and promises to a world where the only things that matter are solid unit economics, which is just a fancy way of asking, does each customer actually make you money, genuine utility, and, you guessed it, actual profitability? So, our first piece of evidence for this new era? It comes all the way from Brazil. Let me introduce you to PicPay, a fintech giant that's making a huge move onto the global stage. And listen, they are not some small startup. We're talking about a massive, established user base of over 30 million people. That kind of scale gives them the credibility and the momentum they need to file for an IPO right here in the US. This isn't just a hope or a dream. This is a proven business ready for the big leagues. And you can see why they're so successful. PicPay is definitely not a one-trick pony. It's a full-blown super app that has woven itself into the daily financial lives of its users. It offers everything from simple payments between friends all the way to complex services like credit and insurance. It's the whole shebang. So what's the big signal here? It's that the IPO market is cracking open again, but there's a catch. It's only for companies that have already done the hard work. They're not just waiting around for the perfect market. No. They're creating their own momentum because they have the numbers to back it all up. Now, let's switch gears to our second story. We're moving from a big public market move to a quiet but super strategic acquisition by Ripple. And the theme here is the surprising power of doing the boring stuff really, really well. To really get what Ripple's doing, you have to understand this term, financial reconciliation. I know, it sounds a little dry, but it's the unglamorous, absolutely vital process of making sure all the numbers match up behind the scenes so that money doesn't just disappear. It's literally the plumbing of the financial system. So here's the strategy broken down into three simple steps. Ripple, through a company it backs, buys a firm that specializes in automating that whole reconciliation process. And why would they do that? To strengthen the foundational pipes that move money for their big institutional clients. It's all about making the system more efficient and more reliable. I absolutely love this slide because it's the perfect metaphor. The crypto world is basically trading in its leather jacket, the symbol of all that hype, the memes, the noise, for a Patagonia vest. It's a huge culture shift towards spreadsheets, utility, and building durable tools that a CFO will actually use. And that brings us to our third and final story, which might just be the ultimate example of this new maturity. Let's talk about Wealthfront, the robo-advisor that's basically the valedictorian of its entire graduating class. This timeline really shows that Wealthfront's success was no overnight story. I mean, they were founded way back in 2008. They spent more than a decade patiently and quietly building their business. And now all that discipline is paying off with top marks from Wall Street analysts. And this right here is the core lesson from Wealthfront. The automation they built wasn't just to make the app look slick or feel cool. No, it was a fundamental business strategy that allowed them to keep their costs way down, scale efficiently, and ultimately become highly profitable. Okay, so let's tie these three different threads together. We've seen a global IPO, a strategic acquisition, and a major analyst upgrade. So what's the common theme here? Well, it's all about maturity. This table just summarizes the new playbook perfectly. PicPay shows us that having proven scale is how you win. Ripple proves that building the boring, essential plumbing is way more important than fleeting hype. And Wealthfront? Well, they demonstrate that disciplined, long-term profitability is the ultimate prize in this new game. And if you take away just one single thing from this explainer, let it be this. The rules of the game have fundamentally changed. The companies that are winning today are the ones that are, well, kind of boring, profitable, and automated. They have officially beaten the loud and lossy startups of the past. Which leaves us with one final and really important question to think about. As the industry starts rewarding maturity and real profits, what happens to all those companies still playing by the old rules? In this new era, who gets left behind?